Welcome to Wonderslate. Subscribe to our Telegram channel given in the description to updates and study materials. Topic for today's quiz is Financial Statements 2. Question number 1. Net profit is calculated in the underscore. Option A. Trading account. Option B. Balance sheet. Option C. Profit and loss account. Option D. Trial balance. The correct answer is Option C. Profit and loss account. Financial statements of the business are prepared normally at the end of the financial year. There are three main statements that are prepared. 1. Trading account, which shows the gross profit or loss after debiting all the direct expenses. 2. Profit and loss account, which shows the net profit or loss after considering the indirect expenses. 3. Balance sheet, which shows the assets and liabilities of the firm as on the date. Question number 2. Closing entries are those which are past underscore. Option A. At the end of the year. Option B. At the beginning of the year. Option C. For rectification of errors. Option D. For suppressing profit. The correct answer is Option A. At the end of the year. Question number 3. If closing stock appears in the trial balance, it should be underscore. Option A. Credited to the trading account. Option B. Credited to the profit and loss account. Option C. Deducted from the purchases in the trading account. Option D. Shown on the liability side of the balance sheet. The correct answer is Option A. Credited to the trading account. Closing stock is an inventory which is lying with business on the last day of the accounting period. Closing entries need to be passed in books of account at the end of the accounting period. For closing stock, the entry will be as under closing stock AC. Drive to trading AC. Question number 4. Closing stock of previous year is the underscore of next year. Option A. Cost of goods sold. Option B. Purchases. Option C. Sales. Option D. Opening stock. The correct answer is Option D. Opening stock. Closing stock of previous year is the opening stock of next year and is reflected in the trial balance of the next year. Question number 5. Financial statements usually consists of underscore. Option A. Trading account. Option B. Profit and loss account. Option C. Balance sheet. Option D. All of them. The correct answer is Option D. All of them. Financial statements are prepared at the end of the financial year to know the overall financial performance and financial position of the business. Following are the financial statements. Trading account is prepared to know the gross profit earned by the business. Profit and loss account is prepared to find out the net profit after deducting the indirect expenses from the gross profit. Balance sheet is prepared to know the financial position of the business on a particular date, including the position of assets and liabilities. Question number 6. Depreciation are shown as a underscore to fixed asset. Option A. Deduction. Option B. Appreciation. Option C. Addition. Option D. None. The correct answer is Option A. Deduction. Question number 7. Expenses which are paid in advance is termed as underscore. Option A. Prepaid expense. Option B. Outstanding expense. Option C. Unpaid expense. Option D. None of them. The correct answer is Option A. Prepaid expense. There are several items of expense which are paid in advance in normal course of business operations. At the end of the accounting year, it is found that the benefits of such expenses have not been fully received. A portion of its benefit would be received in the next accounting year. This portion of expense is carried forward to the next year and is termed as prepaid expenses. The necessary adjustment in respect of prepaid expenses is made by recording the following entry. Prepaid expense AC drive. To concerned expense AC. The effect of the above adjustment entry is that amount of prepaid part is deducted from the total of the particular expense, and the prepaid account is shown on the assets side of the balance sheet. Question number 8. Provision for bad debts are also known as deduction from balance sheet. Option A. Debtors. Option B. Creditors. Option C. Sales. Option D. Purchases. The correct answer is option A. Debtors. Question number 9. Underscore helps in preparation of final accounts. Option A. Journal. Option B. Ledger. Option C. Trial balance. Option D. None. The correct answer is option C. Trial balance. A trial balance is a bookkeeping or accounting report that lists the balances in each of an organization's general ledger accounts at the year end. Accounts with zero balances will likely be omitted. The debit balance amounts are listed in a column with the heading debit balances, and the credit balance amounts are listed in another column with the heading credit balances. The total of each of these two columns should be identical. With the help of trial balance final accounts, that is trading AC, profit loss AC, and balance sheet is prepared. Question number 10. Bad debts is underscore to business concern. Option A. Profit. Option B. Loss. Option C. Income. Option D. Expense. The correct answer is option B. Loss. Bad debts refer to the amount that the firm has not been able to realize from its debtors. It is regarded as loss and is termed as bad debt. The entry for recording bad debt is bad debts AC doctor to debtors AC. For example, Ankit's trial balance contains bad debts amounting to 4,500 rupees, whereas the sundry debtors of Ankit are reported as 15,500 rupees. The existence of bad debts in the trial balance signifies that Ankit has incurred a loss arising out of bad debts during the year and which has been already recorded in books of account. Question number 11. Underscore is an amount the firm has not been able to realize from its debtors. Option A. Bad debts. Option B. Provisions. Option C. Depreciation. Option D. None. The correct answer is option A. Bad debts. Question number 12. Irrecoverable part of debtors is called as underscore. Option A. Creditor. Option B. Discount. Option C. Bad debts. Option D. Earnings. The correct answer is option C. Bad debts. Bad debts refer to the amount that the firm has not been able to realize from its debtors. It is regarded as anticipated loss and is termed as bad debt. Sometimes, some people fail to pay their dues either partially or completely. The amount that is irrecoverable is a loss and known as bad debt. The following entry is passed when a debit balance becomes bad. Bad debts AC drive. To debtors AC. As an effect of this entry, the debtor's account is closed and a new account called bad debts account is opened, which is transferred at the end of the year to the profit and loss account, debit side. Question number 13. Money spent to reduce working expenses is option A. capital expenditure. Option B, revenue expenditure. Option C, deferred expenditure. Option D, prepaid expenses. The correct answer is option A, capital expenditure. Capital expenditure or capital expense is the money a company spends to buy, maintain, or improve its fixed assets, such as buildings, vehicles, equipment, or land. Here, money spent to reduce working expenses is improvement of asset. Question number 14. Outstanding expense are underscore to expense. Option A, added. Option B, deducted. Option C, no effect. Option D, none. The correct answer is option A, added. Question number 15. When RDD is given in trial balance, it is known as option A, old RDD. Option B, new RDD. Option C, both A and B. Option D, none of them. The correct answer is option A, old RDD. Doubtful debts are those debts whose recovery is doubtful. It is not certain whether they will be recovered or not. It is an anticipated loss. Therefore, suitable provisions should be made for bad and doubtful debts, so as to calculate true net profit of the business. Provision for doubtful debts is created on debtor's balance, not on bad debts, at a fixed percentage. Firms make provisions for expected losses based on their prior experience. Provision for doubtful debts is made to cover for possible losses from debtors going bad. If RDD already exists in the trial balance, then the same is credited to profit and loss account since this is the old RDD and needs to be reversed. Question number 16. Reserve for doubtful debts is created when recovery of bad debts is underscore. Option A, certain. Option B, recovered. Option C, not recovered. Option D, doubtful. The correct answer is option D, doubtful. It is quite possible that the whole of the amount may not be realized in future. However, it is not possible to accurately know the amount of such bad debts. Hence, we make a reasonable estimate of such loss and provide the same. Such provision is called provision for bad debts and is created by debiting profit and loss account. Reserve for doubtful debts is created when the recovery of bad debts is doubtful. Provision for doubtful debts is also shown as a deduction from the debtors on the asset side of the balance sheet. Question number 17. Underscore is not available in the financial statements of a company. Option A, total sales. Option B, total profit and loss. Option C, capital. Option D, cost of production. The correct answer is option D, cost of production. Cost of production is meant the total sum of money required for the production of a specific quantity of output. However, cost of production is not recorded in the financial statements of a company. Question number 18. Underscore expenditure is in more relation with business activities and are recurring in nature. Option A, revenue. Option B, payment. Option C, outstanding. Option D, prepaid. The correct answer is option A, revenue. Any expenditure which benefit is exhausted in less than 1 year, or which has to be made in recurring form to derive its benefit is called revenue expenditure. Revenue expenditure is made for smooth functioning of the business. Question number 19. The prepaid expense is shown on the underscore side of the balance sheet. Option A, assets. Option B, liabilities. Option C, debit. Option D, credit. The correct answer is option A. Assets. There are several items of expense which are paid in advance in the normal course of business operations. At the end of the accounting year, it is found that the benefits of such expense have not yet been fully received. A portion of its benefit would be received in the next accounting year. This portion of expense is carried forward to the next year and is termed as prepaid expenses. The necessary adjustment in respect of prepaid expenses is made by recording the following journal entry. Prepaid expense AC drive. To concerned expense AC. The effect of the above adjustment entry is that the amount of prepaid part is deducted from the total of the particular expense, and the prepaid expense is shown on the assets side of the balance sheet. Question number 20. Expenditure is in more relation with business activities and are recurring in nature. Option A. Revenue. Option B. Payment. Option C. Outstanding. Option D. Prepaid. The correct answer is option A. Revenue. All the expenditures which are incurred in the day-to-day conduct and administration of a business and the effect of which is completely exhausted within the current accounting year are known as revenue expenditures. These expenditures are recurring by nature, i.e., which are incurred for meeting day-to-day requirements of a business, and the effect of these expenditures is always short-lived, i.e., the benefit thereof is enjoyed by the business within the current accounting year. These expenditures are also known as expenses or expired costs. For example, purchase of goods, salaries paid, postages, rent, traveling expenses, stationery purchased, wages paid on goods purchased, etc. Thank you for watching the video. If you'd like practice this quiz, then download the Wonderslate app now. Link in the description below. If you have any suggestion for us, feel free to leave comments. If you liked the video and want to see more of it, hit the thumbs up and don't forget to click on subscribe button to get more updates of the future videos.